Hello and welcome to the Silver Log. In this video, we'll take a look at the longer term charts on silver. But before we do, I want to take a look at gold. And we'll look at it on the 60-minute time frame. Now, this is where it was a good time to actually get into gold. And you might think, no, it wasn't. It was at a top. It was a bad time to get into gold. And that is gold over silver. That's when the gold to silver ratio found a bottom near around 30, and now it's went up quite precipitously. Precipitously? That ain't much of a word. However, normally speaking, when the gold to silver ratio goes lower, gold and silver both will end up going higher. And when they go higher, they end up both going lower. Therefore, buying gold into here means that if you bought it with silver, you can buy more silver now if you were to sell it here. Now that's pretty much all I'm saying. But as far as the price action is concerned, this pattern of lower highs has been pretty much taken out. The 5-day moving average has been also violated. Resistance in here not able to hold above it, but whenever you have a failed move like this, oftentimes you get a fast move, and this is one of the non-often times showing strength. That the failure to have a fast move, the failure to not have a fast move after a failure should be a failure which should bring a fast move to the upside. Got it? I don't, but I sort of do. Granted, what I want to state though is if this is going to be a trend reversal for gold and the intermediate term trend is going to start to rise, making higher highs, higher lows, you could probably expect silver to do the same thing and the gold to silver ratio to keep going lower or to continue to go lower within its primary trend. Alright, there's enough about gold, and let's talk about silver. And I've talked a lot about these charts that, to be honest with you, it's starting to get a little boring. Because if you've been watching this, you already know what I'm doing here because you've already seen it before. These parallel lines showing that we're still in a bull market. I can draw another one up towards here somewhere, regardless of the fact it's in a nice uptrend. Since this down move, there has been 2 weeks where it has really been consolidating within this sideways action. I've already talked on the 60-minute chart how boring and neutral the recent market has been behaving, and if we break below this level, then there could be much more downside target. However, with that being said, we got our correction, or we have a significant correction, and if we have moves coming back up towards this level, it would thus give us the energy needed to make the big moves. Because whenever you have a considerable correction through price or through time, then that can often give you the stamina or whatever word that you're looking for the big plays. Now, as far as this on the monthly term time frame, I'm going to draw a few lines in here. There's one approximately in here. There's another one in here. Let's just make it so that it's close to where they're supposed to be. The next one, somewhere around this area here. Next one below that, somewhere in here, followed by in here. These are the major support resistance lines that I've been talking about for quite some time, based on the $4 low and the $8 high. Fibonacci upside. The first one, $10.47, $14.47, $20.94, $31.28, and $48.36. Oftentimes, these Fibonacci calculations can work to great resistance and support. And for the most part, it has actually come down to this level. Now it's 31.28, so this line should be like here. Regardless of the fact, if it's a little bit above the line or below the line, that doesn't mean much to me. It had a successful resistance test here. It's already come back to this key area because if we break down below this level, It really means testing in the break of the 31 level. Yes, I suppose it could break down below 32 and then bottom around 31 or 30, which would still be a hit of this 3128 area. But when you have previous resistance that becomes support, works towards the upside, then you'd have another test towards this level. And when we look at this on the quarterly chart, we first established this 50 level back in 1980. It's back there again. The fact that I even have to state that we're back at the 1980 highs should tell you right then and there that there has to be something either fishy within the paper traded market or something over the last 40 years has just destroyed the value of silver, if even with all of the inflation and money creation over 40 years, 30 years really, that it's still below its high. Wouldn't it be nice to get around the same prices of gas prices of 1980 or housing prices to be around the same? And imagine you got paid what you got paid in 1980. You know what? That isn't happening. However, the market does state on a nominal level that it is below its non-inflation adjusted nominal 1980 highs. You can call what you want about this being manipulation, or it's all because of the Hunt brothers, so you really can't count it. Well, I guess we can't count today because there's a lot of wacky stuff going on.